You had to let go some senior level executives, highly talented people, because you see AI doing really good job. Does it mean that AI will take over our jobs in the future?
I think yes, in many ways, AI is going to replace the traditional roles. We wanted to validate whether we could actually go and lean on applied AI to replace this. We are operated by AI. We're really walking the talk. To me, and by extension by Rapyd, stablecoins equals dollars. The card rails are, yes, going to be disrupted as well, like everyone else. Why fix it if it ain't broken? Well, guess what? It may not be broken, but it's going to be seriously challenged.
David, welcome to the show. You are GM at Rapyd. And one thing I want to ask you today, the first thing, are you reading the latest news about stablecoins and what's happening in the market? I'm referring to OpenUSD, a totally new a stablecoin that's launched by 140 plus companies. What was your reaction when you read this news?
So, first of all, Sam, thanks for having me. It's a pleasure to be here. Yes, big, huge news, actually. Very interesting because effectively it's, open sourcing, a rail that is proven to be really adding true value. Okay. I think that we have seen a lot of solutions looking for a problem in the world of the quote unquote blockchain. Stablecoins have really proven that the real pain points that are being solved. I'm sure going to get into it.
Yes.
And the business models that have been evolving around that, have created depth, but this is like super disruptive, right? So this is really like going out in the open and with the entire backing, pretty much of the, most of the industry. It seems a new standard that is being, implemented, a new chapter in the world of money movements.
So you guys also launched very recently your stablecoin solutions at Rapyd for your merchants and customers. Do you think basically you will add this stablecoin to your stack as well, or you gonna stick to major ones at the moment, including Circle and Tether?
So at the moment, there's no alternative, to be very frank, right? Because although the announcement is huge, yeah, for lack of a better
Yes.
word, the market has also reacted, very, violently, I would say, right? If you look at some of the stock prices, but there's a little bit of time to get there, right? So there's
Yeah.
clearly a formal launch. There's also the regulatory aspect that needs to be done, and truly globally, right? So that typically doesn't happen overnight, although clearly the backing is very strong. All this to say that today it's business as usual, very frankly. Let's see how
Okay.
this evolves. I am very sure there's going to be some very interesting responses from the, let's call them incumbents. Okay.
Okay.
And, we are, following this with great interest. Overall, I think the major beneficiary is going to be the end client, right? Because there's going to be yet another option at an even more competitive way of doing it 24/7 all around the world.
Right. And I see massive numbers around stablecoins. Someone say like it's $33 trillion processed in 2025. But when Chain Analysis, they did an analysis of the market, they stripped out bots and internal transfers. And it seems like a real world stablecoin transactions are closer to 9 trillion. So from what you see at Rapyd, working with players in the market, with your merchants, how much of this actually commerce and how much of that is just actually crypto trading?
I think that first of all, we're in the world of payments, right?
Yeah.
And we really see the former example that you mentioned, which I gotta believe that from not only what I've been reading, but also anecdotally my own connections in the market, the brunt of the activity still is related in, let's call them, sitting out market
Okay.
volatility in the crypto trading world, right? That's still
Mm-hmm.
the main use case, which that solves a pain point. But in terms of the day-to-day, making a difference on how the world works, hasn't really, made an impact. That is actually where payments have started, using and embedding stable coins. And there we're really seeing value add. Yes, it is a minority of the overall volumes, which I think having these new protocols, having a lot more competition in the market, I think is going to push, ultimate usage in effectively replacing the US dollar outside of the US, right? That is really, I think, the main service that these stable coins are providing in my mind.
But we know that two major stable coins in the market, USDC and USDT, are dollar based, and it seems like now maybe 97% of all stablecoin transactions are tied to dollar. Do you really believe that stablecoin will replace dollar? I don't think so. It doesn't seem to me so.
Not replace, no. But I think to me and by extension by Rapyd, stable coins equals dollars. Okay, and what I mean by
Yes.
this is that I think, much to the respect of all the other people involved, stable coins in currencies that have real time payment rails, that are in currencies that are not necessarily used for global trade, are solutions looking for a problem. In other words, stable coins in euros, when you have SEPA instant, yeah, sure, you could, really enhance the ability to have euro move instead of Swift on the blockchain, but the brunt of the euro, invoicing is really within the SEPA area, within its own market, so to speak. The US dollar is still a very different beast, right? The US dollar, whether we like it or not, it is the truly global currency, and it's very frictious. Yeah, I mean, this is not something new, by the way, right? You can go back to the 1950s when the so-called euro dollar came about, to basically have deposits of US dollars outside of the US. It was in London. The pain point has always been there, and actually that traditional market has been really challenged because the price of US dollars outside of the US, which was the LIBOR market, if you remember,
Yeah.
that has been completely disrupted, and so liquidity has disappeared, and stable coins are picking up, where that euro dollar left off. So that's super interesting. It's not only for payments, it's also for securities, in the fiat world, right? And I think it's really very exciting to see a continuation of it. And yeah, it I think very much is about the US dollar. We're unapologetic about it.
I will dive deeper into this topic in a moment, but before that, to my audience, David Rosa is a GM at Rapyd. Rapyd is a payments company, one of the leading payments company in the market. He's responsible for AI transformation, FX, and payouts and platform solutions. David, just for my audience to understand, what exactly do you guys do at Rapyd? How are you different from, let's say, Stripe or Adyen in the market?
I think that we clearly are in the business of helping, merchants get paid, right? So, helping them connect to their revenues is an extremely important thing, and a very aligned type of activity. Okay, so we do this very globally. We are very present in the emerging markets, so that's one of the major differentiator in terms of that aspect of the business. I'm sure I've seen the recent headlines that we have both pay-use business in Latin America, in Africa, in Eastern Europe. So that establishes us even more so in the emerging markets. But I think the big difference is that we're actually doing what a lot of people are still talking about, which is being operated by AI. I mean, if you look at our operations, anywhere from the onboarding to the mundane but very important tasks of optimizing the customer journey, starting with onboarding, I think we have a gold standard today, right? And challenge out there to come and beat us in terms of the ability of onboarding our merchants. We over 80% of our merchants are onboarded instantly around the world, right? And this is not just because we're winging it. That is not the case. We're actually doing a proper due diligence, and we are very heavily reliant on applied AI. For that, 96% is done within 48 hours, right? So it is an experience that's second to none, and we love the challenge. It's taken us years, in all honesty,
Right.
to really build it. And like everything else that has touched on AI, has accelerated exponentially in the last 12 plus months, right? But really, this is super enabling for ultimately our partners and our clients. So yeah, we are operated by AI. We're really walking the talk. Okay, this is really a very exciting
Yeah.
part of this, and we're very present in the emerging markets. Those are the main differentiators, for Rapyd.
I see. I think in emerging markets, especially, I believe AI comes really, really handy. And as you said, especially in onboarding process, because in emerging markets, it's not that easy to collect all the information because they are not that established like UK, US, or other markets. You have to ask more details. You have to do through background checks, right? And I believe AI could be one of the best tools. Your CEO, Rapyd CEO, said publicly that AI will triple the company's profit margins within the 3 years. I want to understand, where does that actually come from in payments business? What I'm specifically is interested. So, are you optimizing the business, or cutting the cost? How are you planning to, let's say, triple the profits?
So it's super interesting question. Let me dig into it. So first of all, we've actually implemented this, being operated by AI initiative from what we think is a position of strength, right? Because we have reached profitability. This is not only like the typical exercise that people go and like, okay, let's use AI as the excuse to cut costs, right? That's not actually the
Mm-hmm.
motivation. What we have done, which has been, a challenge to implement and get, the following amongst the different teams, and we've gotten there, is basically to create efficiency by, and I know this is going to sound crude, but having less people involved. Okay. It's human nature. All
Okay.
right. Like you can have individuals that are super smart, but the moment you have a meeting or two or three and you have many stakeholders, people just disengage very quickly and there's little ownership of issues. And so you can have these very amorphous meetings as you basically grow. And, we've grown to at some point over 1,000 plus employees. It just creates bureaucracy. And by background, I've worked in a very large corporation, and it's just very demoralizing when you see this happen so quickly from a startup to get there. It's human nature. Okay. So the main point of the exercise was to actually reduce the number of humans involved in decision taking. Right. There's still very much humans
Okay.
involved, but less. Okay. Less chefs in the kitchen, as we call it. Okay.
Right.
And that has been, believe it or not, a huge enabler, because then information flows a lot faster, just like the early days of a startup. This is super empowering to anybody who's been an entrepreneur, who's very much into entrepreneurship, because all of a sudden you cut out this otherwise really a red tape. And that creates the efficiency that then helps, number one, really multiply the top line, because you go after business a lot faster. Okay. Then you couple it with the automation that, applied AI gives us. I mentioned, for example, the onboarding, and you turbocharge with it. So cost cutting is really a byproduct of it. Of course, there is, right? That's the reality as well. But it is not the biggest way to ultimately, get a higher margin and triple those numbers. It's really by growing the top line with a multiplier effect, because communication, the right type of communication, happens a lot more efficiently.
Right. And you lead basically AI transformation at Rapyd. Can you please walk me through one use case where you guys implemented AI and it is really working? I would love to understand the use case so that my audience also gets the understanding.
Yes, sure. So I'll give you two, in fact, actually use
Yes,
cases, right? So
please.
one that we're super proud about, it's, how fast we've been able to automate the onboarding of businesses, right, across different jurisdictions. So where you
Okay.
basically, it's a very well-known pain point. Yeah. Like for any regulated financial institution, onboarding a business, especially more so than, the individuals behind the business, is challenging, because, you need to ultimately get into corporate registries, making sure that you actually validate the information that you're told about, that you trust but you verify, and really augment this type of due diligence depending on the industry of, the particular client. And this is where I think a lot of competitors or other players in the market either avoid areas, like,
Mm-hmm.
for example, retail trading, online, a brokerage, that is really challenging, because it's truly global. It's also regulated, and there's a lot of like, this is just too difficult, right? We're not gonna get involved. We actually got there by hiring subject matter experts in the industry, right? And automating, really like taking a brain dump, for lack of a better word, and really mapping out what is the process, not only, the operational process, but also the mental process, right? Of how do you, look at these edge cases, and automating, end to end. Okay. And this has really resulted in our ability to transport effectively a business model that was primarily operating in Europe, now across, many different geographies. So that's
Okay.
one, which is really very, very important. As I said, it didn't happen overnight, right? It was a substantial investment in going there, but we think very, very well worth it. The second one is more loaded and actually really, really interesting, because I think it goes to the bleeding edge of where we are in terms of very heavily leaning into applied AI. Okay, so I mentioned before that we have actually reduced, the number of people involved, and in some cases actually at the relatively senior level as well, right? Like people who are actually knowledgeable about particular processes, particular, alignments, refinements. When you talk about the world of product, so to speak, right? You need
Yes.
to basically have
Yes.
these very synchronous kind of meetings, whether in person or indeed online, but everybody kind of huddles up, and you have these kind of very bureaucratic type of processes that come out. And so we rip that bandit out completely. Okay, there are functions that we have not even replaced. If people have left, we have actually, let go some really good people. By the way, that had nothing to do with the individuals. It was that we wanted to validate whether we could actually go and lean on applied AI to replace this, right? So from this very synchronous type of process of basically aligning and refining the many different moving parts of the company, right, that are building
Okay.
all the time, okay, we built an operating system effectively to do that, right? So it's now asynchronous. And it helps us effectively have what we call forward visibility. Like you have two different departments that are building something that has dependency on one another. Effectively, the system flags like, hey guys, in 2 weeks' time, as the speed that we're going, we're going to clash because we don't have alignment here, right? So it's
Right.
really empowering. It's very new, okay? And I think this is something that goes at the very heart of really leveraging AI to multiply, metrics, financial metrics, ultimately.
David, I have to ask this question since you brought up this topic. You mentioned you had to let go some, let's say, senior level executives, highly talented people, because you see AI doing a really good job. I want to understand, does it mean that AI will take over our jobs in the future and this will affect job security? I just have to touch this point because one of the burning questions in the market.
Sure. I think yes, in many many ways, AI is going to replace the traditional roles that have become traditional today. But this is
Okay.
nothing new in terms of paradigm shift. Depending on whichever generation you're part of, when the internet came about, I know it may sound like a well trodden topic and like oh again, but it's true, right? Like I used to be a
Yes.
trader, and all of a sudden we had almost free flow of information, and you're bombarded by many many different sources. That was highly disruptive. You had to
Right.
adapt, right? And some parts of the industry, yes, sunset effectively, right? Some old jobs don't really exist anymore, but guess what? People had adapted. It's brutal because it's the speed at which this is happening, okay? And the last thing I would say is that counterintuitively, the emerging markets are the ones that are actually getting impacted the worst in my mind. Because if you think about it, right, when before the world of, heavy automation via AI, you used to throw bodies at the problem. Okay,
Mm-hmm.
so if you have some
Yes.
operational, problem, I'm not going to use any names of particular emerging market jurisdictions, but you can see what I'm talking about. Okay, outsource right to those places. Actually, now this is now being done by the machine, faster, cheaper, better, and this is
Absolutely
a
true.
big challenge, I think, for particularly service oriented emerging markets, not countries that make physical goods only. Like those services
Yes.
are really being very disrupted.
Call centers, for example, they are being significantly affected by AI. And there is a theory that AI agents are going to optimize the transaction costs and route them away from card rails, which usually charge 2 to 3%, and AI agents will go and use more stable coin rails that are fraction of a cent. What do you think from your perspective at Rapyd and what you see, guys? Is that a realistic scenario? And what are the timelines?
I think it is a realistic scenario, okay, and it disrupts even ourselves, to be very frank, okay.
Okay.
So we're very much on top of this agentic payment type of again buzzword, right? A lot of people talking about it. There's actually little action, but we are
Yes.
very heavily looking into it. My personal opinion is that it's actually the part of the payment cycle that's just the most painful psychologically, but also typically fraught with frictions, which is parting with your money. So it's not so much about collecting money from your clients or getting your revenues, is to pay your
Okay.
costs. Psychologically, when you need to pay your costs, you're always cringing already. That's not
Yes.
nice thing to part with your money. Secondly, it's always very difficult. So I think account payables and automations are really going to be at the forefront of this. And typically, a lot of invoicing cross border is very often invoiced in dollars, so it feeds back into the thematic that we were talking about before in stablecoins. You definitely want to do it with programmable money, right? Why the hell would you want to continue doing what we're doing on a daily basis? So I think that is definitely one area. The card rails are yes, going to be disrupted as well, like everyone else. And the card schemes they're waking up to this. Yeah, they're very much
Yeah.
on the forefront. And you've seen some M&A activity even from card schemes. Buying some stablecoin infrastructure players, some good ones as well.
Yes.
And so those are the initial steps. I do think that this is eventually gonna happen. But it's not gonna be free money transfers around the world, right? Like the world of
No.
free. I think it's a bit of a race to the bottom initially, and then eventually, it stabilizes, right? So I wouldn't say that the today's incumbents are just going to disappear. I doubt it, right? But they're going to be challenged. I mean, we're all going to be challenged, I think, and we're all trying to basically be on the front foot for this.
Visa and Mastercard are always there when there is a new technology, and I want to continue this topic. For example, Mastercard launched Agent Pay for machines this month, and in this flow, AI basically initiates and completes the payments without human involved in the whole process. What do you think? What actually changed for payment stack when there is no buyer? I mean, when there is no person in the flow and only machines complete the transactions. What would change at Rapyd stack, for example, if you could give me the flow?
I think this is actually a problem that we've been dealing with, interestingly, internally, right? And the topic is RBAC, or role-based access control. Who has the right to access some information? Who has the right to write information, not only read information, right? So
Yes.
that's actually very internal type of pinpoint, because it is, you have many different people across different jurisdictions with different responsibilities that you need to, govern, for lack of a better word. So the learnings we've had in our own internal governance of, data and data privacy is something that's very directly applicable, I think, to the world of agentic payment, because which agent exactly is going to be allowed to do what, okay? And what if there is something going wrong, which likely will, right? It's business. Things go wrong in business from time to time. So what happens then? So I think that the governance around, this entire space of agentic payments is going to be the main driver. And this is how we're adapting and preparing for it based on our own internal learnings.
All right. And if we talk about topic of governance, MiCA's transactional period ended actually 2 days ago on July 1st. And it seems like some of the numbers that I read on the market, like about 1,200 platforms were operating under temporary registration in Europe. Only around 210 got full authorization. So what actually happens to all platforms that didn't make it, in your opinion?
Right, like we've seen. So there's a lot of different use cases. The more mature had a very clear and robust plan in place, though they're in a queue. Right, they've been applying for effectively CASPA registration or regulation and licensing in robust jurisdictions. It's a question of when, not if, and if there is a very clear direction of travel in terms of how those players have prepare themselves, we tend to go along with that, because you want to be supportive of business, and it needs to be something robust and credible, right, as a direction of travel to get the right licensing. It's just that you're dealing with government institutions or central banks that typically are slower, let alone during the summer months in Europe. So that's one. To the other extreme, where people who are like, as always in industry, like silence, no real vision. In which case, you're gonna tell them, go and do your homework and come back when you're more ready. Okay. And in some cases, something in between, but primarily it's those two extremes, right? We've seen little in between, very disruptive, because all of a sudden it's like real serious consequences. It's not like you can wing a regulatory setup. It doesn't matter that you are in the world of the blockchain versus the fiat world. It's still regulation. In fact, the two worlds are very much coming together, right? So interesting times indeed. Like a few days ago, that was showtime.
And you deal with trading platforms at Rapyd. This is your vertical, and definitely MiCA creates a new compliance layer for anything touching crypto. Do you think this will affect the payouts and pay-ins for crypto platforms now moving forward?
It already has, right? And I think even going over this hump of the July 1st timeline, I think you're going to continue to see the primary friction we've seen in this industry, first of all, it's an industry that's still very misunderstood, right? And I used to be
Yeah.
a trader myself, and so I find that the lingo is easier perhaps to get affinity with, and once you're aligned with the jargon, you start moving. But perhaps more to the point, I think that the biggest issue is, I don't know how much of this you've experienced yourself, but as an investor, okay, and you want to really catch the timing. Timing is everything in life in general, okay? But especially when
Right.
you're trading in the markets, right? What
Right.
you don't want is like, you can see there's an opportunity coming up. Oh, you need to top up your account. Oh, it's taking, some like days, sometimes weeks, because it's US dollars that move via Swift. This is the pain point, right? So aside from the regulatory setup that is very important, as we discussed, that's going to get ironed out over time, I'm very sure.
Yeah.
The real pain point is this instant gratification for an industry that really requires it, okay? Because markets move, in a blink. And so you want to be able to have the liquidity available to then, express your view on the market. And this is what we specialize on.
Right. And most of the trading platforms, accept that some percentage of deposits fail. They accept this, they budget for it, write it off, move on. But in reality, what does that actually cost a platform when you add up the full picture, not just the failed transactions? I think it's going to add up hugely, right?
You're absolutely right. I mean, I think it costs you clients, right? Like, people get very frustrated because some platforms, do it better than others. And when you lift the hood, you realize that it's the payment stack that they're using underlying, right? That is, or underneath, that is really enabling them for a better, smoother, more instant type of experience. And so, a payment stack is not just an operational efficiency. It's actually an insurance policy against not losing clients. Yeah.
Right.
In fact, growing it, because you can actually hoover up activity from your competitors if you have a much smoother way of, enabling your clients to express views on the market.
Right. And, trading is different from country to country. A trader in Brazil, for example, deposits differently to a trader in Poland or South Africa. How much does offering local payment methods in each market actually makes the change and helps with the conversion rates?
It does to some extent, because again, assuming that the typology and the platform is indeed licensed from or covered from a regulatory point of view,
Yes.
To cover an emerging market jurisdictions. Don't forget that a lot of emerging markets have capital controls in place, so it ends
Yeah.
up being a lot of a local aspect. Though in some cases you do have cross border. When you get into the cross border, the reality is that you're again back in the world of US dollars. Okay.
Yeah.
And so connecting those local payment rails, which interestingly and increasingly in emerging markets are real time, anywhere from banking rails or alternative payment methods, they are typically quasi or real time. Does help, but then you need to have a very efficient FX operation, right? Because typically your view, your investment that you're gonna express or investment that you're going to make is a US dollar based investment. Okay. So
Yes.
even if you're starting with Brazilian reais, you're going to have to, convert into US dollars and then backwards at the end. So yes, it does matter. But then if you don't complement that with a very strong, truly global FX platform, you have a solution looking for a problem, right?
What does your FX stack look like? If you could give me a bit more information at Rapyd.
Okay, so this is actually one of the first things that I built when I joined Rapyd.
Okay.
By background, as I mentioned, I was a trader myself and very
Yes.
involved in emerging markets, which
Yes.
de facto means a lot of FX. I used to joke with Eric, who is the founder CEO of Rapyd, that we didn't know how to spell FX at Rapyd. Okay, and literally the mistakes that, by the way, I have seen even in banks, by professional traders, people inverting bid offers, lines of code that are written the wrong way around. It's extremely easy to make very basic mistakes, and so we really boiled it down to very, very strong but very basic building blocks. Educated the entire company about how to spell FX, literally. Okay, I went on this evangelification of FX, and it really paid off, because people were number one interested because they know that it's involved in a global business. But this was like 4 years ago, by the way, and since then we basically continue to rely on this very strong foundation that you either have it or you don't, right? And many people have at some point some horrible accident that happens because of some decimals or because again of bid offers being inverted. This is something we invested very early into building, and it's part and parcel of the stack that we offer.
Right. And you briefly touched this point of local real-time payment rails. For example, in Brazil, it's PIX. In UK, it's faster payment. India has UPI. We have real-time fast payments locally. Why didn't it translate into cross-border payments? When I'm trading, for example, I want to do payout very quickly from A country to B country, but it doesn't work that way. I still have to wait. It's not like I'm using faster payments in UK.
Yeah. So this is because, in my mind, there is no central government authority effectively that
Hmm.
acts as the global clearinghouse, right? Because
Yeah.
these payment systems move money. Money is at the very heart of a jurisdiction, of a legal system of seniority, right?
Yes.
And the you know ultimately what creates the legitimacy of a nation, of a jurisdiction.
Yeah.
When you started crossing jurisdiction, then you get into even geopolitics. Okay, some countries don't like to deal with one another, right? So how do you have a neutral, truly global, 24/7, 365 days a year platform that helps you clear that? Well, you don't. And as a result, what you have is private sector platforms. We're one of them, who basically just garner as much volume as possible, ideally two-way flow, so you can net it and actually collect what is called the bid offer in the middle. But that is really the why there is no central clearing for these real time rails that is
Hmm.
ultimately at the government level. Um, I also think that this is where stablecoins really play very very nicely, right? Because there you can have a rail coupled with on-chain FX, okay,
Yeah.
that can really do. Because when we talked earlier in the discussion about the pinpoints that stablecoins do solve, the ultimate for the people who have been involved is either what's historically been called the sandwich structure,
Hmm.
where you on ramp
Yes.
in one jurisdiction, you off ramp everything in quasi real time, or now
Yes.
atomic settlement. I guess it's the new wording. The
It
same thing,
is.
right? It's really, I think, lending very well into this. And so now with this new protocol kicking in with the OpenUSD, also could be like a turbocharge for this type of platforms. And I'm super excited to see this happen.
OpenUSD funnily reminds me Libra by Facebook.
Huh?
If you remember in 2019, they launched again with a lot of big names, including PayPal's and others. But unfortunately, it didn't work out. But it seems maybe now regulation is in place and everything will play around differently. But again, as you said, I see many different opinions in the market about governance and etc. So I'm really curious to see how this will evolve. And David, this is my last question, and I want my audience, especially merchants, to take away one key thing from this discussion. You sit basically across FX, payouts, platforms, AI, and at Rapyd. What what's the mistake you see businesses making on and on when it comes to payments, and what would you recommend them to change to fix this mistake?
I think the mistake people do, especially now that you're having applied AI really kicking across industries, is, oh well, why fix it if it ain't broken? Well, guess what? It may not be broken, but it's going to be seriously challenged, right, by all these big changes. And so the mistake is just like driving the car looking in the rearview mirror, basically, right? You
Yeah.
need to invest the time and the effort to really stay abreast of all the developments. And like really it can also challenge ourselves, right? Because our clients also are looking out, right? Who plan B, plan C. You do need to
Yes.
plan for plan B, plan C. And guess what? Plan B or plan C could actually be substantially better than plan A. So I think this is the mistake. There's a lot of mental inertia. This is in finance in general, which is an industry full of middlemen, which is why
Yeah.
this applied AI, ripping the band-aid out, that I was talking to you before. Less people involved actually make the signal move much faster. And I think this is something that I encourage people really to do. Don't get complacent. Really do the research. Cut through the red tape and stay abreast of things, because the world is really changing in terms of payments now.
moving really fast. David, really enjoyed the conversation. Thank you for coming on the show.
My pleasure. Thanks for having me.